inviting me to make a presentation of the Ubharte Sitaare Fund. Thanks to the organizers and thanks to the participants for having patience to hear me out on this. Just start off right away on this presentation. I'm Amit Paul. I represent SIDBI Venture Capital Limited, which is a fund manager, a venture capital fund manager, and we are the fund managers for the Ubharte Sitaare Fund, which is Category 2 SEBI registered alternative investment fund for emerging exporting champions. And so the genesis of this fund was laid in the state where she proposed that maybe set up anchoring by Exim Bank and SIDBI, and part of that would be used for setting up, providing equity support to companies which are in which want to increase their exports. Maybe they are from various sectors such as pharma, auto component, and others. And this would have, of course, three components. I'm sure the honorable participants from Exim Bank and SIDBI would have briefed you or would be briefing you about the debt component and the technology upgradation and the handholding component. So I will basically try and brief you about the equity part of this. So as we see, this is about the overall scenario of India and global trade, where by figures that we have from World Trade Organization and others, we see that India is only a very small portion of world trade, only about 2%, which is skewed. And we, of course, all of us know about how China has been performing. China is much better. India, we all know that we can do much better in global trade, and that maybe the Ubharte Sitaare Fund is a step in that direction to enable kickstart this process. We have a long way to go. This gives a small scenario analysis of the fund's identified sector, the exports of the fund's identified sectors so far, and what it can achieve in a business as usual scenario and in an optimistic scenario by 2020. So we can see that it is about 266, should go up to 339 in business as usual scenario, and in an optimistic scenario it should be about 2020, and then 2026 it could go up to $537 billion. Now, the way that we have structured the fund is that it's a 250 crore fund with a greenshoe option of another 250 crore, which could mean a target purpose of about 500 crores to invest. And investments would typically be in individual SME companies with an average ticket size of about 25 crores, where a minimum ticket size could be in the region of 15 crore and maximum could be in the region of 40 crore. That's what the thought process is right now. We expect to end up making about 20 investments from this fund all over the country, all over the country, and the investment could happen in various tranches. So if the commitment is say 15 crore right now, maybe 2 years down the line there could be another tranche of another 10 crores, depending on the requirement of the investing company at that point of time, and also the fund's own internal perspective of further investment at that point of time. The fund expects to invest for various purposes, and those purposes could be capital expansion. They could be capital expansion, basically capital equipment, or acquisition or M&A financing, or technology upgradation, product development, marketing and business development, which is, I guess, would be a very important component of exporting companies, new market entries, which is another expenditure which is generally not funded these kind of things may not find favor with banks. Working capital, of course. These are some of the possibilities that the investment from the fund of the Ubharte Sitaare fund could we could look at. What are we looking for in the target companies? Of course, high scalability and non-cyclical businesses. We need high entrepreneurial drive and ethical leadership from the promoters. The large addressable market size of the product services that addressing. Technology-driven business models is something that keeps the company at the forefront. We are looking at typically existing revenues in the range of 50 crore to 500 crore of those companies. Generally, minority stakes is what the fund looks at taking by way of its equity investment. The fund is looking at an investment period of 3 to 5 years, which basically means that we would like to start exploring exit options after 3 years and look at full exit within 5 years' time of making the investment. The exit paths for the fund, first option would be, of course, an IPO, then a strategic sale, and then another option would be sale to other financial investors who can buy out the Ubharte Sitaare fund, put in more money maybe later, depending on the requirements of the company, and take the company to the next level. So these are some of the focus sectors of the fund. As we can see that we are, of course, we are looking at software services and technology, even software products, which is doing very well, of course, from India. We are looking at agri-tech, which is coming up, and if we exporting companies which are there, most welcome. Consumer branded goods, basically consumer brands, is of interest to us. So maybe those brands could be in any sector. They could be in apparel, they could be in processed food, they could be in electronics, whatever. They could be in pharmaceutical. So branded and consumer goods could be of across the spectrum of sectors. Another focus area is electronics. Then, of course, auto ancillary, light engineering, pharmaceutical, medical devices is something that the fund is very interested in, along with chemicals. We are also looking at fintech and edtech, as well as food brands. Food brands would, of course, get covered as a subset of consumer brands that the fund would be interested in investing. This is just to give you a brief idea of the entire investment process. Typically, it's a much longer time frame than comparable, because it starts with a preliminary screening on receipt of the proposal, the application from the company's side. This is followed by a detailed evaluation, internal evaluation, and internal discussions with the company and the management of the company on the structure of the deal, where various parameters are discussed, such as what would be the amount of investment, what would be the valuation, what would be the instruments by which the fund would invest. The instruments would typically consist of instruments such as equity shares, preference shares, or debentures, or a combination of all. Then it requires approval of the investment committee, our investment committee, where the management of the company is invited to make a presentation directly to the investment committee. And upon investment committee approval, this is followed by due diligence by an external firm of chartered accountants, followed by documentation, legal documentation, which is basically the execution of shareholders' subscription agreements and other ancillary documents. This is then followed by actual investment, disbursement by the fund into the bank account of the company, especially the open bank account of the company. And this process from preliminary screening to investment generally takes 4 to 5 months, out of which the most time frame is taken up by the external due diligence and documentation. And after the investment is when we would typically like to be on the board of the company and nurture the company and help the company to expand further, create new markets, new products, and new customers, expand financially, improve revenues, profits, market share. After which, as I said earlier, 3 to 5 years is the exit time frame for the fund. And that is when the fund would look to exit its holding in the company to maybe another investor or offload through an IPO. These are the modes of investment. As I said, these are the instruments that the fund generally utilizes for making its investment, and they comprise of either one or all of them. So equity shares would definitely be one of the instruments that the fund would use. In combination with equity shares, the fund could also look at investing through compulsorily convertible preference shares, optionally convertible redeemable preference shares, compulsorily convertible debentures, and optionally convertible debentures. And this is worked out during the deal negotiation phase, depending on the requirements of the company and what the fund is also comfortable with that. So during the discussions, we arrive at a suitable deal structure for investment in a particular company. This would be generally be different for each investment and would be tailored to the needs of the company at that particular point in time. So there is no loan or debt that is provided by the fund. We do not provide loan or debt. Some of the key investment terms that the fund will follow, which we will have executed, which we will have suitable clauses in our share subscription agreements, would be option of nominee director on the board of the company, nominee director to be appointed by the board of the investing company. Some affirmative voting rights with respect to capital raise, auditor appointments, expansion, diversification, and fee management appointments. Information rights with respect to monthly MIS reports. The fund would require monthly MIS reports and information of effects affecting the business. So a brief write-up on the monthly developments on the business. And some other terms such as right of first refusal or right of first offer, which basically provides the fund with the privilege to participate in any new equity offering that may happen after the investment by the fund. So today, if the fund is, Ubharte Sitaare fund is invested, say 15 crore in a particular company, and 2 years down the line, there is the company needs to raise further rounds of funding, then it would have to offer it first to Ubharte Sitaare fund, invite Ubharte Sitaare fund to invest that money. If by any reason the fund is unable to invest, then it can be offered to new investors to invest in that. Anti-dilution rights basically shield investors' percentage stake in the company. And exit, the fund typically will have exit options, which start with first of all an IPO, followed by a strategic sale or sale to other financial investors. And if that doesn't work out, then other options such as put option or buyback. Generally, there is also a liquidation preference clause in the fund documentation, which basically is about, again, protecting the fund's investment. At least a minimum capital should be returned. That's what the liquidation preference talks about. How will we help you to grow? So, these are some of the things that the fund will do. Typically, the board observer or the nominee director alongside the board of the company will work to first of all improve corporate governance, appointment of proper auditors, beefing up the HR, the team at the company, participating in strategic decision making, So we would just like to, point out that we do not partake in day-to-day decisions, but our participation is at the board level. And the whole purpose of that participation at the board level is to strategically prepare the company for its growth, enable growth at the company, to take the company to the next level. We will participate in major decision making by the company, such as entering new markets, launching new products, large orders, whether we should take those orders, how to finance those large orders, any fundraising that is required by the company, whether by way of debt or equity in future, is where we come in and help out for the management. Just to give you an idea of our sponsors, and I'm sure you would, of course, have learned about this already. The Export-Import Bank of India and the SIDBI are the sponsors of this fund, as a part of the overall Sitaare program. And the fund has been set up with sponsorship from